Small business owners will most likely be facing higher tax rates in the near future. The following case study demonstrates how any small business owner can use tax strategies to slash at least $10,000 off their tax bill every year and use that money to build wealth. In this particular case study, we're going to reveal how to use 8 tax strategies, all acceptable by IRS standards, to reduce a business owner's taxes from $30,199 to $12,305, for a total tax savings in 1 year of almost $18,000. Here we have the Plummer family, whose family income is $160,000. Joe owns a plumbing business, and Joe's wife is a part-time nurse at the local hospital. Joe and Janet also have 2 children, Jimmy, who is 17 years old, and Janie, who is 14 years old. Looking at the family finances, we see that Joe earned $100,000 from his plumbing business, and Janet's part-time wages from nursing are $50,000 a year. Joe and Janet also have $10,000 in investment income. Neither of the children have jobs. As a result of this income, Joe's total federal tax owed after all his deductions is $16,069. However, since Joe is self-employed, he must also pay self-employment taxes on his business income, which totals $14,130. And the total amount of tax that Joe paid the IRS is $30,199. Joe decided that he's paying too much in taxes and wonders if there's anything he can do to save money on his tax bill. So Joe contacted a tax specialist to see if there were any available strategies that he could use to save money on. After visiting the tax planner, he suggested 8 potential strategies. Number 1, Joe could install a health reimbursement account so he can deduct his $10,000 in health insurance premiums from his business and save $1,500 in self-employment taxes. Joe could also add a health savings account to cut taxes by $2,000. The health savings account is really a 3-for-1 tax strategy because not only are your deposits tax deductible, but you also get tax-deferred growth on the money when it's left in the account and tax-free distributions when you use that money for medical care. Since Joe already gives his 17-year-old son money to run on during the year, Joe could also hire his son in his business so he can deduct his wages. Once he does that, then he could also use a little-known technique to deduct his son's car from his business too. Joe could also install an education assistance plan to write off his son's college tuition as a business expense. Joe could also give some of his business equipment to his son, then lease it back through the business, which would save Joe about $3,000 in taxes. And at the same time, since Joe will soon need to pay for Jimmy's college expenses, Joe could gift his highly taxed investments to his son for college and eliminate Joe and Janet's $10,000 in investment income from taxes. Finally, since Joe needs to borrow $20,000 for plumbing equipment, instead of getting a high interest rate business loan, he could borrow his home equity and use a little-known IRS regulation called 1163-10T05 to deduct his personal home interest from his business income. This strategy alone will dramatically reduce Joe's self-employment tax. Now, let's look at how these 8 strategies would affect the tax that Joe paid to the IRS. As you can see, after implementing these 8 strategies, Joe's net business income is now $44,050, not $100,000. Janet's wages are still $50,000, of course, and Jimmy now has wages and the income from investments, but since Jimmy is in a lower tax bracket, his taxes will also be much lower. Plus, Jimmy's income is not subject to Social Security tax because he's under age 18. As a result, Joe's total federal tax owed after implementing the 8 strategies will now only be $6,081, and his self-employment taxes on his business income will now only be $6,224. In the end, Joe's taxes went from $30,199 to $12,305, and he saved $17,894 in taxes, which he can now use to invest and build wealth. Now, please understand that these results will vary from business to business, and not every business owner will get the same results as demonstrated here. However, we only used 8 tax strategies to demonstrate the power of advanced tax planning, and there are dozens more that we could have used to further increase Joe's tax savings. And this example does not include state taxes, which also decrease using these 8 tax strategies. The bottom line is taxes will likely go up soon for small business owners. And if you don't use every available tax break that the IRS allows, then you are needlessly giving money away that you could be using to invest and build your wealth for the future.